You noted how the Chinese government was investing in New Zealand government bonds. Are you aware of a quota that they have, or that the CIC might have, or the Chinese government? Have you had talks with them about that?
Well, we've only discussed it with them at a high level about the soundness of the New Zealand economy. I mean, they have vast reserves, and we'd be a very tiny proportion of their investment program. But increasingly, governments, reserve banks in the Asia-Pacific area have been interested in New Zealand government debt because we are seen as a stable, developed country with moderate economic prospects.
Do you think Chinese investment in New Zealand government bonds is helping keep the New Zealand dollar up? Well,
it's part of it. It's really responding to our. Well, what keeps the dollar up is actually our need for debt. So, as we get closer to surplus, our rate of increase will slow down. When we get to surplus, we'll stop growing our debt, and that will help with the dollar.
Do you think the Chinese government's investing a lot in those bonds, though, helping to keep the New Zealand dollar up right at the moment?
Oh, look, it's hard to say. But as I said, it's not the investors who keep the dollar up, it's our need for debt. They only turn up because we are going out to borrow money. And one thing we can do to take a bit of pressure off the dollar is to get to surplus so we don't need to be out there borrowing more money.
But there are lots of foreign central banks requiring to buy New Zealand dollars because they're trying to diversify their portfolios, so that drives up demand for New Zealand dollars. So surely it must be part of the problem.
Oh, well, in general, just with respect to government bonds, they can only demand as much as we're supplying, and we intend to get to a position where we don't need to be issuing new debt.
What do you mean with lower debt? Would mean lower New Zealand dollar?
Well, part of the New Zealand dollar is driven by a lot of different forces, and they change from week to week. Some weeks we're seen as a safe haven, other weeks we're seen as a risky investment, and the markets can't quite make up their mind. But in general, the government can take some pressure off the dollar by getting to a position where it doesn't need a whole lot more debt. That would help, but it doesn't guarantee the dollar at any particular level.
Are you worried with the current level of the New Zealand dollar if it's lasting for longer?
Yeah, we would prefer that the New Zealand dollar was a bit lower so that we could get the rebalancing in our economy moving with a bit more momentum. It is a continued challenge for exporters to be able to be profitable at 80 cents in the US dollar, and they need to be profitable so they can reinvest in export growth.
Back to foreigners diversifying their resources, and have you had any look at how that could be pushing up the dollar as they demand New Zealand dollars to do that? Whereas before the financial crisis they might not have held so many New Zealand assets? Well,
look, we just get the advice that we are seen as an attractive destination and often bundled with Australia. So, in the way that the market takes some pretty simplistic approaches to the world, Australia and New Zealand are seen as a pretty positive economic story, politically stable, got some reasonable prospects of economic growth, and in the developed world that's unusual. So as long as that is the case, we're going to be the least ugly in a beauty parade of developed economies, none of which look too good.